20,000. So this is a local level of sharp resistance while we are cliff dwelling, while we are on the verge of a major macroeconomic event during a time in which the macroeconomy is the main cause of concern that is threatening the bull market. That's the importance of today summarized. Ladies and gentlemen, let's be very clear. Today is a very important day, and it's important for a reason that relates to the threats we've been seeing on Bitcoin recently. It's important because its implications on the macroeconomic environment. We are seeing the inflation data, the CPI data, coming out in less than 6 hours from the time this video is posted. And given where Bitcoin is on a short-term level, as well as where the cryptocurrency market cap is on a medium-term level, this is going to be very, very influential on the price action for the next couple of weeks. Guys, I made a poll yesterday. I asked the question, in 30 days, Bitcoin will be above or below 100,000. And 77% of you said we'd be above 100K. Well, a lot of that is going to depend on the results of today's CPI release. So let's wait and see what happens, but let's understand it first. That's what we'll do today. Ladies and gentlemen, before we get into it, let's check out the BitUnix and BitGet exchanges. BitUnix being global non-KYC. You can sign up from literally anywhere in the world. And BitGet being global minus the USA. I've handpicked these exchanges. Okay, I reached out to them for partnership. They did not reach out to me. They did not pay me money to advertise them. I do it on my own accord. With a referral link down below, you can sign up to these exchanges. You can get a 15% trading fee discount for life, again, exclusively with that referral link. So use those links down below, take your picks, get on a good exchange to help yourself and to help me as well. Let's get into the content. Shouldn't take more than a few minutes here today, guys. I really want to be brief with it. This is a very time-sensitive video. Let's just establish the, I guess, fragility of Bitcoin and cryptocurrency's position right now, but also keep in mind the fact that we are macro bullish, okay? Let's be very clear there before we even say anything else. Bitcoin is in a macro bull market. The macro structure is intact. We are above levels that we need to be above. We are in a macro upwards trend. The 4-year cycle is still intact, okay? Are you happy? Is that sufficient? Right, now we can get into what actually matters. Although we're in a macro bull market, the fact of the matter is we're in a very precarious position right now, and it's very important to understand that position rather than just brushing it off and saying, oh, it's okay, we're bullish on the macro. We need to understand the threat in order to address it correctly. So right now, Bitcoin has this support line in yellow stemming backwards from the 2021 all-time highs. It is very comfortably holding at the moment. We actually went below it briefly the other day. Let's go to the daily chart and just look into that. As you can see, we saw a flash crash below that level. It was very, I guess, scary, but we spoke about it on the YouTube channel. We said while that was happening, this is not a confirmed breakdown. It won't be a confirmed breakdown unless we at least see a daily candle close. And I kind of encouraged you guys to remain vigilant, but also to remain calm because that was not a confirmed breakdown and there was no signs of it being a confirmed breakdown. And of course, we've come back upwards now. And a lot of people are taking this little bounce back to the upside as a sign that Bitcoin's back in the clear. Not really true, okay? It's not really in the clear. Now, before we move on to the Bitcoin charts, we've got the total cryptocurrency market cap in a very similar position to Bitcoin. So Bitcoin has this kind of yellow ascending support line from a 2021 cycle. And we can see it's nicely stationed on a little plateau above that support line. A very similar things going on with the total cryptocurrency market cap, except its support line is stemming backwards from the prior all-time high in 2021. But just like Bitcoin, it's very comfortably stationed above that all-time high. And so there's no macro breakdown here. We're still in a bull market. We're not bearish because we're still above those plateaus. And that's a good sign. And as long as we hold that support, that's all good. But we are in a very similar position across the market here. So it's not just Bitcoin. It's the total cryptocurrency market cap, and it goes further than that as well. It also goes into the S&P 500. The S&P 500 breaking down from a yellow ascending wedge formation, but still managing to hold on to that bull market support band. So in a pretty dangerous position, but still not really in a breakdown. It did the same thing here in September last year, and of course in September last year, that's when Bitcoin bottomed out at around the 50K region. And from there, we went to the upside and doubled in price over the course of the next month or two. So look, again, the Bitcoin market, the total cryptocurrency market cap, even the S&P 500 traditional markets, they're all kind of in the same position right now. They're not in downwards trends. They're not in bear markets. They're still bullish, but they're dwelling. They're cliff dwelling, and it's a very scary position. Now, this is where we get into the importance of today. This is, of course, the point of the whole video. Today is very, very important. And it's important because a lot of the threat that is being presented to Bitcoin right now stems from the macroeconomy. We know this because the DXY is acting abnormally at the moment. Now, the DXY, the US dollar index, is reverse correlated to Bitcoin. We've got the Bitcoin chart here in green. We've got the DXY in candles. We can see, historically speaking, when the DXY is in a bear market, Bitcoin is in a bull market. This has happened time and time again. You've got a DXY bear market here, Bitcoin bull market, DXY bull market, Bitcoin bear market. We've got a DXY bull market here, a Bitcoin bear market. Okay, the point is they're reverse correlated. And the issue right now is that Bitcoin is meant to be in a bull market. It's meant to be in a 4-year cycle bull market, but yet the DXY is rising. And this is pretty much clearly showing us that the threat, the main concern right now, is the macroeconomy. Why is the macroeconomy not doing what it's meant to be doing here? Why is it acting so strangely? There's multiple reasons for that. The first reason is probably because the Federal Reserve is being very cautious on how far they're bringing down interest rates. They're being very aggressive on their approach against inflation, much more aggressive than they have been previously at this part of the cycle. And so it's leading to some deviations here. There's also other reasons, but we can get into that in the future if it becomes a more genuine concern. But this brings us into the importance of today. Obviously, I've just noted that really the deviation here and the threat here is pretty much being caused by inflation and things regarding inflation. Now, the CPI report's coming out today, and that is the report of inflation. So, of course, this is extremely relevant to Bitcoin. It's relevant because of the circumstance we're in right now, where inflation is a threat. But it's also, and the response to inflation specifically is a threat, but it's also relevant just by default. We know that CPI releases lead to short-term volatility. CPI is coming out in 6 hours, and we can expect short-term volatility. Now, why does that short-term volatility matter? Well, the short-term volatility matters because, as we've established, Bitcoin is cliff-dwelling, as well as the total cryptocurrency market cap, as well as the S&P 500. So any short-term volatility that sustains into an actual move could have major implications for these charts and the broader markets. But even on a more local level, it's very important to understand where Bitcoin is right now. Bitcoin is, this is the hourly chart on Bitcoin, the 4-hourly chart, sorry. Bitcoin is, although it's bouncing, and a lot of people are seeing that bounce as good news, they're buying back, they're thinking everything's great, and I'm not saying you should have sold, I'm just saying a lot of people did sell and they're buying back. But we're not in the clear here. We're not in the clear on the short term. And we're not really in the clear on the medium term either. The long term's still looking good, but the fact of the matter is we have the 50 SMA, the red line right here. I'll make it pink so you can see it. It's a moving average. Okay, it's a moving average that is acted as a very important line on something like the Bitcoin daily chart. Let's just go back and see that. You can see the interactions between the 50 SMA and the Bitcoin price over and over again being very, very, very important over the last year or so. But even going further back, we could go back years and show you. And the fact of the matter is the 50 SMA is locally acting as a very major resistance zone. And this is the 50-day moving average, by the way. And on top of that, we have the POC on the volume profile of the entire price range layered at this exact price region at around 97.5 thousand. So this is a local level of sharp resistance while we are cliff dwelling, while we are on the verge of a major macroeconomic event during a time in which the macroeconomy is the main cause of concern that is threatening the bull market. That's the importance of today summarized. So I cannot stress this enough. Whatever happens today, it needs to be good. Because if it's bad, if we see a bad release on CPI, and if we see the market crash downwards here, it could be very, very concerning. Let's be very clear, the bull market is not over if Bitcoin drops below this yellow line, for example, but it's certainly going to be put at threat. Okay, right now everything is fine. Right now everything's all good as we sit up here at 96,000, but we're not in the clear. And the fact of the matter is we won't be in the clear until we get through today unscathed, and we probably won't be in the clear until Bitcoin's above 103,000, which is the most local resistance zone and the place in which we saw our most recent rejection. Breaking that 103,000 level will put Bitcoin back in an upwards trend and will put Bitcoin back in a position to attack all-time highs once more. Until then, we are at threat. That's the simple reality. I understand this video was probably a bit confusing. There was a lot of information to get through and I was jumping from topic to topic to topic, explaining different charts. So apologies if you are misunderstanding a bit of this video here today, but I think I concluded it very clearly and concisely at the end there. So I appreciate you guys. Leave a like, comment, and subscribe if you want to. Also, check out these exchanges, the Bit2Nix exchange and the BitGet exchange. I mentioned them at the start. I don't need to go on the spiel again. Just know that you can use my links down below. And if you sign up with those links, you'll get a 15% trading fee discount for life. They're global non-KYC. Takes 30 seconds to sign up. Get on those exchanges if you're interested. And guys, go ahead and check out the VIP group on Telegram if you're interested. I post altcoin trading signals there 4 times a week. I've been doing it for 3 years. I've tracked every single trade we've ever taken, every single win, every single loss, and I put it in a transparent PDF document so that you can view the results to see if they're adequate, to see if they meet your requirements, your needs before you sign up. You're also getting access to a very useful group chat community with 150 members. So check that out if you're interested. Thank you guys for watching. I hope you enjoyed. And I'll catch you very soon. I'll keep you updated on the situation, of course.